You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, all. Welcome to another week of the Perth Property Show. My name is Trent Fleskens, your host, as always. Today we're talking property investment, speculation versus actually investing. What makes you a punter and what makes you an actual investor? To help us out, we've got Kieran McErlean from Provident Financial Services. Kieran, thanks for coming in.
Thanks for having me, Trent.
Now, as always, we like to remind everyone that Kieran is an associate financial planner at Paul Carter Pty Ltd, trading as Provident Financial Services. He's an authorised rep for AMP Financial Planning, and this information is obviously general advice only and isn't intended for anyone's personal situation, and everyone should keep that in mind. Let's talk about the difference there between speculating and investing. We all like to consider ourselves property investors or property experts. All of us can get on realworld.com or realestate.com and buy something, really. We've all got that possibility. We can all get a loan from the bank. But I think there's a big difference when you buy that property. Are you having a punt? Have you done enough research? Have you got enough of a plan? Or are you really investing? Is there a real goal around it?
I think that you'll agree with me to answer that question straight up, and we'll go into some more detail. But the difference between having a punt in anything and investing is education. If you're a first homeowner and you're out there looking for a house by yourself, you're so green, you may not know nearly as much as the local real estate agent or professional in the area.
House and land sales rep in Ellenbrook.
Exactly. So I think that the difference between an investor and a speculator is education. The investor has a goal. Usually the investor is looking to build something over time. I would classify an investor as someone that is self-disciplined in terms of, they just have an objective of a time frame.
They have an exit strategy.
And an exit strategy too.
And that strategy, it might be a 30-year exit strategy. It might be to pay off that loan over 30 years. But to understand, once we've done that, what's the outcome? Is the purchase price we're buying this for? Is the timing we're buying it in? Does that suit the outcome we're looking for to be able to get X amount of profit out of this investment? Because let's face it, whether you're going to live in it or you're going to rent it out, every purchase of property is an investment. And it's most likely the biggest investment you're ever going to make.
Just a balance of understanding risk versus reward. If an alarm bell's going off and someone's come along and said, guaranteed profit of 50% a year for however many years, someone who understands averages and returns of the scale of stocks or bonds or property, wherever it is in Australia, if you're educated about averages and returns or even just the basics, that's going to set an alarm bell off for you.
Well, I think a great example has been in the last few years the downfall of the Pilbara. Especially real estate agents who would be selling these properties. And I think this is an amazing one. You always hear it on TV. Future performance does not reflect past data, know? And real estate agents be sitting there going, it's gone up 20% every year for the last 3 years. And therefore, it's a pretty safe bet. Yeah. Well, I bet those real estate agents were surprised in 2015 when things started falling away very quickly. There goes people's life savings based on an idea.
And also diversification. I mean, any basic rule of investing is ensuring that you diversified to mitigate the risk. I mean, there's always some risk in investing, but it's about aligning the investment within your risk tolerance and diversifying. I mean, when the boom was on and they were buying and leveraged up to their eyeballs in debt of properties scattered in the Pilbara at times when
a lot of people made a lot of money, they got out.
Yeah, even just to take a step back from situations like that and realize that when you're investing and putting all your eggs in one basket, whatever the asset class is, you've got to be prepared for the risk that is associated with that. At the end of the day, it's as simple as that.
If I'm going to buy a property that has been growing so quickly with, let's face it, not many fundamentals behind why other than quick demand supply ratio, if I'm going to put $1 million down on that 3x2 in Karratha, am I prepared to lose $700,000 of that and still be able to move on with my life?
Yeah.
I don't think many people ask themselves that question.
No. And I think that a lot of people don't have the backup plan if it wasn't to go peachy or rosy. And we've had that in WA. The last however many years, we've had positive property growth. The downturn was completely unexpected from a lot of people who had been investing in the market for such a long time.
People had been saying it for a while, but because it was such a broad industry of oil and gas, iron ore mining, gold mining, construction boom in the city, no one was quite sure when the penny was going to drop. when the tap was going to be switched off.
And anyone who tells you that they know the future, in a personal opinion, no one knows. Otherwise, everyone would be very wealthy. I think at the end of the day, there is some speculation with everything. But if you're meeting someone who's guaranteeing something, you've also got to ask more questions there, because not everyone knows everything. And there are going to be some people who get it right, but there's going to be a lot more people that get it wrong as well.
So let's talk about ways to push us away from being a speculator to as close as an investor who has done their numbers as possible. What are some alarm bells straight away on the speculation side, things you haven't done that we can tie up on the way to making that purchase, for example?
I'm going to bring it back to education, is my opinion of the difference.
So we're talking to a number of professionals in the industry, not just relying on the one real estate agent or the one mortgage broker or the one spruiker at the Tuesday night workshop coming over from the East Coast selling workshops and plans and whatnot. It's all good to speak to all these people, gather all the information as possible, isn't it?
Yeah.
But it's about then building a perspective
to build your own opinion,
balancing that yourself, looking at data.
And
property magazines, they've got a massive bit at the back there which goes through a lot of tables of data as to where prices have moved. That's all good to know the data.
But also, I mean, not everyone has the interest all the time for that. I acknowledge that myself, and I know you, Trent, as well. You have an interest in the data and the analytics and the analysis and the market fluctuations and the economic cycles. Not everyone is that interested or has the time for that. So I think there's a lot of people that go into making these big decisions, whatever the type of investment, property investment or stock market investing, where they're going in blind. They don't know too much at all. And I just see that the value of hiring or paying or outsourcing a professional who has a good reputation, who has spent however many years, day in, day out, seeing it all, seeing the pitfalls, seeing the wins with a better understanding of that market, whatever it is only going to help someone.
Understanding what a win looks like and what a loss looks like. So you can understand straight away whether, for example, this property is actually at this price a buy, and not based on a number of tricky marketing campaigns from an agent, for example, maybe less so. And it's not just about getting the one professional, just getting a financial planner or just getting a buyer's agent or just getting a broker or an accountant. It's about having that team.
And they all have their place and they all have their value.
Yeah.
Having the right team and the right individual can make a world of difference. And I can vouch for that in all those professional services.
We talk about finding those right professionals in other episodes, but a few common themes there on the property buying side, or when you're looking at investing on a property, even as an expert, if you don't have an intimate understanding of the area and the type of property that you're looking to buy, you are a punter.
Yes.
Even if you're an expert in another state or another part of the city, even if you understand all of what it should look like, if you haven't walked the streets, if you haven't understood where the local planning is going or how the school's going, what's happening with the roads and whatnot, how's the crime rate, if you haven't done that research or just had a context for it, you're a punter. And that's why, for example, on our side, we don't buy outside of Western Australia.
Yes.
Because we would be punting.
You invest in what you know.
Invest in what you know. I think that is a really good way to tie it up. Whatever it is, invest in what you know. If it's shares, invest in a company that you understand. Don't just invest in it because it's been going well or because a lot of people are talking about it. If you don't understand what they do, if you don't understand how they make money and how they may lose money, or if you don't understand how that property is...
If you don't understand the reason for why you got in it,
yeah,
you won't understand the reason or the time to get out.
Exactly. Perfect point. And as I was going to with property, if you don't understand why other people would buy this off you for more than you paid, you're speculating.
Yep, that's exactly
You're guessing
right.
that this will be worth more at some point. Because you don't buy it for the sake of buying it. You buy it because you believe at some time in the future, someone will pay more for this than you did now.
One of the biggest things that I personally took away with one of your presentations at Curtin University was, if you're looking to purchase a property, the difference in cost, how detrimental it can be for an electricity hub box being on the wrong side of the road. The cost that you as an investor or a purchaser have to fork out to put in the underground power under a road can take away a lot of what someone's goal might be in that particular purchase.
Doing your research, understanding, it's all well and good if you're buying a house for yourself, you're not looking to develop. It makes things a lot more simple. But for example, if you are looking at developing, there are so many factors there that need to be covered off in terms of your water and your electricity supply, but also just the demographic fundamentals and planning policy. All these things are publicly available. It's just understanding what you need to know and where you can find that information.
As I said before, not everyone has a lot of time for that. So I think that paying a competent, qualified, experienced professional is an investment, because you're putting your dollars towards someone that you have chosen and trust knows more than you to provide your objective or your goal without making those mistakes along the way.
I 100% agree with that. But that's not to say that you can't invest without hiring someone. I think all it does is narrow the scope of what you can invest in, because we're all experts at something.
That's right.
And we're all very lay at something else. So if you yourself have always had an interest in property investment, you've always invested in certain things, and from experience, both from investing and also from just living in an area, you know an area really well, and you just know just from logic, all those fundamentals about what needs to be there, what doesn't need to be there, and what I need to be paying. Then you're not speculating. You are an expert in your field. But if you decide that you want to invest in something outside of what you can honestly put your hand on your heart and say is your expertise field, that's where the risks come in.
If you've lived in a neighbourhood for a substantial amount of time, and you know the neighbours and you know the parks and you've walked the streets and you know the good areas and the bad areas and the dodgy house or the traffic conditions, the noise, you've got such an insight to that area. It is a scary thing if you're going to invest in an area that you've never experienced.
Based on an idea.
Of course, even people choosing first homes, it's a lot to take in from a first impression on a home open. You're spending 10, 15, 20 minutes in a home that could potentially be your biggest purchase in your entire life. You haven't lived there for a weekend. You haven't stayed there for a couple of months. In most cases, I mean, a lot of people rent in the areas that they purchase to live in themselves. But that's when it comes back to that speculation versus investing and that gamble. What you've looked at as a home open. Do you know all those demographic statistics? Do you know the crime rates? Do you know the local schools? Do you know all those factors that make a difference to the property price, not just now, but potential for the future?
Kieran, thanks for coming in. Appreciate your time.
As always, thanks, Trent.
Okay, today's Suburb Spotlight segment, we're moving south the river again. We are talking Ardross, smaller suburb, but a lot going on. I'm excited about where this suburb's going because of the City of Melville's development policies. It's quite aggressive in my opinion. To help us out with that conversation, we've got, as always, the number one agent from Ardross, Paul Evensen of Realmark. Paul, cheers for coming in.
Good morning, Trent. Great to see you again.
Thank you for coming in, mate. I appreciate your time. We're going to dip right into this suburb. We had Paul Zambody in a couple of weeks ago from Booragoon, so we had some really good understanding of the Garden City side of things. But I want to know what makes Ardross different and stand out from a Booragoon or an Applecross or a Mount Pleasant. Why should someone move into there?
Sure thing. So Ardross for a long time has been a little bit cheaper than Applecross and Mount Pleasant just because of its physical location.
Just a little bit further away from the freeway.
And the river.
Probably
more importantly, the river, yeah. So it's a really affordable suburb, as is Booragoon, to get into that great quality area, still close to the city, nice and close to the river, without paying a premium for an Applecross or a Mount Pleasant address.
The culture, the property sizes, the property age, they all seem pretty similar in terms of vintage.
They are. Applecross probably a little bit older. The original homes in Ardross would be 1930s, 1940s, and not a lot of those still remaining, as you can imagine.
Of course, yeah. Picturing back to how that all started, would have probably been Applecross and Mount Pleasant, and then Ardross was that new fringe estate coming on for new young people in the 30s and 40s.
That's right, yeah. And we used to have kangaroos, not in my lifetime, of course, but we used to have kangaroos running through Wireless Hill.
Oh, geez.
Yeah.
It doesn't take me back. I obviously wasn't there. But
me either. I've heard from grandparents.
You wouldn't have any original owners still there, would you?
I know a couple of people who've been there for like 55, 60 years, but they're well into their 90s by now.
Just quickly, what's the most prevalent type of home? Is it just that new, maybe 70s or 80s or 90s home, or is it really even newer than that in the 2000s?
It's probably a 1990s. Like if you had to pick one house in Ardross to be most representative of the area, you'd probably say a 1990s two-story on about 450 to 500 square metres.
Okay, so that's probably still got a couple of decades left before it's ready to be knocked and pushed over with an even bigger house, I guess, in that area. It'll be even more expensive at some point. But who's buying those properties these days? Or who's buying in? If you thought about your last 50 sales, what would be a representation of the people buying off of you?
It would probably be couples with children, so people probably in their 30s to 40s. And the stats of Ardross show that about 48% of people who live in Ardross are in that bracket.
So they're not first home buyers though, are they? They've probably worked their way up.
Probably second or third home. We're also seeing A lot of parents helping, and probably other suburbs as well, where parents are living in Ardross at the moment, or Mount Pleasant or Applecross. The kids have been at home for a long time, gone through university, moved out, married, and starting to come back into the suburb, and parents are helping them out.
Oh, wow.
Yeah.
Okay. We're going to talk about development, as always, a bit later. But would you say that there are more established homes in Ardross, or would you say there's probably more of everything else?
I'd probably say there are more established homes.
So it's definitely it's still more of a family suburb.
With the local planning there has been a real push to increase the density. So the number of homes that are on those original blocks, like the quarter acres, are definitely slowing down or diminishing.
Yeah,
very much so.
Okay. How cheap can it get? We'll start with our price points, part of the chat. What's the cheapest property I can buy in Ardross?
So it would be a 1-by-1 apartment. So a lot of apartments coming up in Ardross in the last 3 to 4 years, and a lot of 1-bedroom and 2-bedroom apartments. So the cheapest would be just under $400,000.
Okay, so it's still a bit of a buying point. I guess there aren't many older flats that we could buy in at a cheaper price.
No.
Just wasn't the zoning back in the day for it.
Correct. Zero.
Wow.
Yeah,
okay.
Nothing at all.
That's not a bad thing, though, because those flats need to go. If you think about some of those areas around town where we've got those 60s flats that would... I think a lot of people look up at them and go, oh, geez, I wish those would be knocked down. And it's cool that Ardross just never had that.
True. Yeah.
Let's move up the scale a bit more. How much are we buying in at maybe a 3-by-1 or a 4-by-1? That is that 80s, 90s vintage.
So if we're talking a villa, so there might be 2 or 3 on the block, and they may have been done probably in the 1980s, early 90s. You're looking between $500,000 and $600,000 for a 3-by-1.
And I guess something on a bigger block will then be getting close to the mill.
Correct. Yeah.
Okay.
Yeah.
Development blocks. There's not look. I look around Ardross often, and I struggle to find a development block that most people could afford to buy. But secondly, a development block at all. It's a very tightly held suburb, isn't it?
It is. Yeah. The density has changed quite a bit in the area, depending if you're close to Risley Street or Marmion Street, a little bit further up the hill, or Almondbury Road, which borders onto Garden City. So those densities have really changed, and they've brought in some big companies looking to do some big developments, like 30 apartments, 40 apartments.
Yeah, not something for a mum and dad investor.
Probably not.
No. But there are still these properties available. They just haven't hit the market yet.
The older development sites, there aren't a lot. And obviously, if you're looking in that R80, R100 zoning, then you are competing with those syndicates or the bigger companies. But if you're looking for maybe just a 2-lot subdivision...
Just an R20 on a quarter acre.
You're probably looking at just over $1 million. So just over $1 million to about 1.3, 1.4.
Most people, they're knocking the old house down and putting 2 side-by-side 10-metre wide 2-storey houses, aren't they?
Correct, yeah. Depending on the zoning.
Yeah.
If you have the 20-metre frontage, yes, you can do that. Some parts of Ardross, the frontages are a little smaller, so
18s.
a little narrower, so the 18.6, 18.7, in which case it's a front and rear.
I think those, especially those side-by-sides, are a really nice option and they're fetching premium dollars. 500 square metres is not a small block.
No.
You're not wasting space on common property if you don't have to.
Yeah. And
a 10-metre frontage, that's what you're going to get out in the suburbs on a new estate anyway, except you're in Ardross.
Yep.
And you got a 2-storey house
with
a $600,000, $700,000 build on it. These are some nice houses.
For sure, yeah. You're spot on about the frontages. So about 15 years ago, you probably remember 500 square metres would have been considered small, but not anymore. It's a really good sized block. Even in Ardross, we have cottage blocks that are about 200, 250 square metres.
Where are they?
Which streets? They're on streets like Wilcox Street or Tane Street.
So they're the ones in that development zoning that ring around the...
Kearns Crescent, the cafes, the restaurants.
Exactly, they ring around the Risley Street, Canning Highway corner.
That hub, correct.
And that's where there's some really serious development zoning if you want to take it up.
Yeah.
Got a couple of developments that are currently going on there. Tane Street, that have already gone on around that Wilcox.
Yes. Yeah.
Are they selling well?
They are, again, depending on the number of bedrooms. So we've had, in the last 5 years or so, we've had a lot of apartments go up that have primarily been offering like a 1 or 2 bedroom scenario. So developers have thought, okay, great, we've got a quarter acre. Let's cram as many of these apartments in as we can to maximise our dollar. And there's probably going to be a glut of those properties over the next, say, 5 years or so. With development rules changing recently, they're wanting to increase the size of the apartments. So a good size 2-bed, 2-bath, or a good size 3-bed, 2-bath, to give. And I think that's a really good idea, because that will target and aim to hit people who have been living in the suburb for a long time.
Downsizers.
Yep, downsizers, not looking for the retirement village angle, but wanting to stay local. They've been in the suburb for decades. They're well connected. They're hooked up, with friends and family in the area, and they don't want a 1-bedroom, 1-bath apartment. They want
exactly
something
right. It's
still
about knowing the
spacious.
market. It's tough when you see these apartment building syndicates come in. They obviously do their numbers on maximising the yield of apartments. How many apartments can we fit on this block over 4 or 5 levels? What they fail to understand is that not every buyer, especially in a price point like that, is going to be someone who wants a 1x1 or a 2x1 or 2x2, essentially a younger person. They might move out a little bit further because they don't see the value at that price. Where you see people, in my opinion, looking for that smaller alternative option, it's the downsizers. It's the husband and wife who are 70 years old, who have just sold their $1.3 million quarter acre, and they're happy to move into a 3x2 for 800 and something grand, bank $500K for retirement, and stay in the same area with a brand new house, no maintenance.
Exactly, yeah. They're sick of the big gardens and the lawns, sick of all of that.
But they still want space for their
grandkids.
And
they'll pay a premium for the finishes as well.
Yeah.
So the worst thing you could do is do like a cheap fit out inside. You spend some money, great quality appliances, nice bench tops, some really good quality timber flooring. There's a really strong demand for that.
What I'm actually seeing right now, and something that we're currently looking at in that Ardross, Mount Pleasant area, we're not even going to apartments. I believe as well there's going to be a glut of apartments. We're looking at townhouses. I think those 3x2 townhouses with a balcony, as long as you've got that accessibility for the older downsizer as well, that is that middle ground where people still feel like they have their own home. It's a bit funky as well. They're not living on top of people, but the price point is that
Still
bit
affordable.
below $1 million, so that they can have something left over.
Sure, yeah. And they're not part of a massive group of like 30 or 40, so they're not paying the high strata levies. They're in that small community of 4 or 5 townhouses, and we're getting some really, really good response from and demand from people with some townhouses I'm selling right now, which are 3x2 plus a powder room. And these ones offer really good sized bedrooms. So a lot of the times with townhouses, you'd have a good sized master bedroom, but bedrooms 2 and 3 would be really pokey, right? But now the smart developers are building or creating bigger bedrooms. So for the teenagers or the young adults who are still staying at home, they can set a laptop up in their bedroom. They can stay at home a lot longer. Obviously a lot more expensive now, living costs for younger people to get out. So that if they can still stay at home for another 3 or 4 years, save up a bit more, and then make the leap out.
Where do you think Ardross is going in the next 20 years? What do you think Ardross looks like in 20 years from now?
20 years, wow, that's a very long-term question. I think we'll see a lot more development. Over time, Canning Bridge will be redone, as it needs to be redone now, but there'll be probably light rail between Fremantle to Canning Bridge, and maybe even light rail. I'd love to see this going up Risley Street, up to Garden City, because Garden City is doubling in size.
It's a hub.
Yep, it is going to be a hub. There are going to be apartments there. So if you've travelled to Sydney and Melbourne, you'd see some of those hubs being created now, and I think Perth will follow. Garden City is really one of the best shopping destinations in WA. It's a beautiful shopping centre.
And it's about to be upgraded.
It is, yeah. It's going to double in size, yeah.
I think you're right. I think what we're going to see is that nod to the heritage of Ardross. You're still going to have, and they've done that, they've protected those bigger blocks, at least the R20 level. But what I think they've done very intelligently and very strategically is have specific zoning where extremely high density is permitted, so that what you don't have is just a slightly more dense version of the whole suburb coming through. You're allowing to keep the culture and the identity, but also where it strategically makes sense for the train station the light rail that may come in, or the shopping centre, providing that walk score for the people who want to live around that hub.
Sure, yeah. And we still have a high percentage of people, so about half the people who live in Ardross have children. So the local schools, Applecross High School, in Ardross, not Applecross, and Ardross Primary School. Both awesome schools, have really good reputations. So that's a big draw card for people coming into the suburb. And not all of those people obviously will want to live in a townhouse or an apartment. They'll still want to have some space.
Exactly right. Paul, every week we ask our number one agent the same question. It's a very simple question, but it has many ramifications in terms of the answer you give us after that. What's the median house price in Ardross? If you had that in your pocket, what would you buy?
So the median house price is $900,000 in Ardross. So with the price increase of land over the last 10 years, that obviously limits you to a certain extent on what you can buy, especially in terms of a development. So I'd probably be buying as big a block as I could in Ardross, like a 728. There are still quite a few 728 square metres. I'd be looking at the surrounding streets to see what development has happened over the last 5 years. How close am I to the main arterial roads of streets like Risley Street and Kamura Road, which even if my density isn't at a number that I could develop today, maybe in the next round, in 4 or 5 years' time, it could be reviewed and my density could be increased.
So a future development opportunity would be your choice.
Yeah, that's right.
Smart. I think those 728s, they obviously, it always happens like that. The quarter acre goes first, and then it's the 1/6 of an acre that goes next. That makes a lot of sense, and it provides someone the ability to get in, live a normal family life at what is, in my understanding, probably less than most people would expect as a median house price for Ardross.
Yeah,
so
it's still relatively affordable. Yeah.
Paul Evensen, cheers for coming in. Appreciate your
time.
Great
to see you again. Thanks, Trent.
And we'll have you in for an update when we got some more news on Ardross and the Garden City precinct.
Look forward to it.
Cheers.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!